The Keltner Channels and the Commodity Channel Index. What do they both have in common? Well, they were both originally intended for commodity trading, and they are both underrated indicators, which I believe deserve more attention. So, in this video, I'm going to explain how each indicator is calculated, combine them to create a trend following strategy, and backtest that strategy on the euro dollar.
Let's start with the Keltner channels. By default, they consist of a 20-period exponential moving average surrounded by a pair of upper and lower bands, each spaced 2 ATR away from the moving average. Unlike a bar's high-low range, true range takes price gaps into account. Keltner channels elegantly convey market sentiment. The slope of the moving average indicates trend direction, while channel width conveys market volatility. The CCI is a momentum indicator plotted below prices. It measures the current price relative to the average price over the 20-period lookback. Unlike most indicators, typical prices are used, which may provide a more representative view of price action. The mean deviation is the average difference between the typical price and its moving average. The CCI is unbound, but the plus and minus 100 levels are often used to denote overbought and oversold conditions, respectively. So how do we combine these indicators to capture those trends? One popular way is to use the trend indicator to detect longer-term trends and the momentum indicator to detect short-term pullbacks. I have covered many examples of these in the trend following strategy playlist that I have linked at the end of the video. But is that the only way? To find out, I decided to use StrategyQuant's genetic algorithm to run through different combinations of the Keltner channels and CCI when applied to the 30-minute euro-dollar. If you're wondering how genetic algorithms work in trading, check out the video at the top right. Here's one of the strategies the algorithm created. The first entry condition is a close above the upper band of the 50-period Keltner channel. For trend confirmation, we want the 40-period CCI to be rising for 4 consecutive bars. Many indicators can be used in both a mean reversion and trend following manner, depending on your choice of look-back period. A stop entry is placed at the previous day's high, with a stop loss at about 3 ATR away. Here's an example of a successful trade, and here's an unsuccessful trade. Markets don't trend often, so make sure your payoff ratio is large enough to compensate for your low win rate. This simple strategy performs decently over the 10-year period from 2012 to 2021, which includes an out-of-sample test over the more recent 5 years. We have a couple of years stagnation, but that's unsurprising since the euro-dollar is, in my opinion, not the trendiest of markets. An overview of the performance metrics shows the strategy was unprofitable in only 2 of the 10 years. So there you have it, another simple strategy that probably works better than you expected. Simple strategies are more likely to be robust, so don't be too hard up on finding that exotic indicator or combination of indicators. Don't forget to like, comment, and subscribe. If you want to play around with StrategyQuant's genetic algorithm, check out my step-by-step guide at the top right. For more trend strategies, check out the playlist at the bottom.